SENG Capital BERHAD was established as a private limited company in Malaysia on May 8, 2006. On October 29, 2008, SENG was successfully listed on the second board of Bursa Malaysia Securities BERHAD, and on August 3, 2009, it was moved to the main board of Bursa. AYER Holdings BERHAD. The AYER Hitam Planting Syndicate Limited was created on March 15, 1907. In 2007, they changed their name to TAHPS Group BERHAD, and they renamed as AYER Holdings BERHAD in 2017.
Assalamualaikum and hi. My name is Alin Nazaha binti Arifin and my matrix number is 284379. Next, I'll be talking about the main activity of the company. So the first one is the SENG Capital BERHAD. In summary, SENG's good may be divided into 5 categories, which are the first one is the eggs. The types of egg consist of omega plus lutein, high fresh eggs 30 pieces, high fresh eggs 10 pieces, and pro eggs. So the second one is the paper egg trays. There are 4 varieties of paper egg trays available, which is multi-K plus, universal, 20 pounds AA, jumbo, and compact. The third one is the fertilizer. This fertilizer comes in 40 kg and 1 kg water-resistant packaging. The fourth one is the animal health product. Some of the animal health products that are available are anti-parasite, antibiotics, food additives, and supplements. The last one is the fresh layer hens. These firms specialize in the production and distribution of high-quality halal entire fresh layer hens that weigh around 1.1 kg to 1.3 kg. AYER Holdings BERHAD, the main operation were through properties and plantation. As for the properties, this company's diverse property portfolio includes residential, commercial, and industrial properties. They are currently working on a flagship project in Puchong that spans 1,219 acres. The example project in Puchong is Andira Place and Bromelia. Next, through plantation. Today, they are an MSPO certified plantation with over 11,000 acres of land. They have also expanded into durian growing. Some of the example of their project is Kuetai Estate Terengganu and Gali Estate Pahang.
Hi, Assalamualaikum. My name is Nur Huda Akilha binti Zulhazmi and my matric number is 284266. I will begin my presentation with liquidity ratio. There are 2 things under liquidity ratio, which is current ratio and quick ratio. Current ratio is a short-term commitments such as those due within a year are measured using the current ratio. Similarly, if a company's current ratio is significantly higher than the average for its industry, it may signal that management is not making optimal use of the company's resources. The formula for current ratio is current assets divided by current liabilities.
The company that has a good current ratio is AYER Holdings BERHAD, which is 20.984, bigger than SENG Capital BERHAD. The higher the ratio, the more liquid the company is. AYER Holdings BERHAD is having a good current ratio because the business has more current assets than liabilities to cover debt. So, if I was an investor, I will choose AYER Holdings BERHAD.
Next, I will explain about quick ratio. The quick ratio assesses a company's capacity to satisfy its short-term obligation using its most liquid asset and serve as an indicator of its short-term liquidity position. In general, the stronger a company's liquidity and financial health, the more likely it is that it will be able to pay its debt. The formula for quick ratio is current asset minus inventory and divided by current liabilities.
AYER Holdings BERHAD have a good number of quick ratio because AYER Holdings BERHAD is bigger than SENG Capital BERHAD, which is 20.9616. The investor tends to choose the company that have a higher quick ratio, so AYER Holdings BERHAD is a great choice. AYER Holdings Berhad has more than enough cash to meet its liabilities while using its capital effectively compared to SENG Capital Berhad.
There are 2 points under activity ratio. I will state one of my points, which is inventory turnover. Inventory turnover is a financial ratio that shows how many times a company's inventory has been sold and replaced in a given period. The formula for inventory turnover is net sales divided by average inventory at selling price.
A good ratio of inventory turnover is from AYER Holdings Berhad, which is 17.1677. The higher the inventory turnover, the better, since high inventory turnover typically means a company is selling goods quickly. So, if I am an investor, I will choose AYER Holdings Berhad to invest in.
Hi, my name is Aminah binti Abdul Salim. My metric number is 284260. I will begin my presentation with total asset turnover. Total asset turnover is to measure the ability of a company to generate sales through the usage of assets. It compares the monetary value of sale or revenue to the entire value of the company's asset. The net sale as a percentage of total asset are calculated using the asset turnover ratio. The asset turnover ratio tells investor how efficiently a company uses its asset to produce revenue. Investors use this ratio to compare companies in the same sector or group to discover who is getting the most of the asset and where the flaws are. The formula for the ratio is net sale divided by the average total asset. As we can see on this table, AYER Holdings Berhad have asset turnover ratio of more than 1, while SENG Capital Berhad have asset turnover ratio of less than 1. For every ringgit Malaysia in asset, AYER Holdings Berhad generate 18 ringgit 59 cent in sale, while SENG Capital Berhad generate 16 cent. Its low turnover might also indicate that the company's collection techniques are slack. The collection period for the company may be excessively protected, resulting in increased account receivable. SENG Capital Berhad could also not be using its asset efficiently. This shows that AYER Holdings Berhad is more efficient. A company uses its asset to produce revenue. Next is account receivable turnover. The receivable turnover ratio is an accounting that measures how well a company collects its account receivable or money owned by customer or clients. The ratio assesses how successfully a company manages and uses the credit it gives to customers, as well as how fast the debt is recovered or paid. A company's account receivable turnover ratio will be greater if it is efficient in collecting on its due payment. The formula for this ratio is net sale divided by the average trade receivable. Based on this table, we can see that account receivable turnover of AYER Holdings Berhad, which is 14 ringgit 97 cent, is higher than SENG Capital Berhad, which is 2 ringgit 67 cent. The higher receivable turnover, the more efficient the company's collection of account receivable. This shows that AYER Holdings Berhad's customers pay their debts quickly. A low turnover ratio indicates that the company's credit procedure should be reviewed in order to ensure prompt collection of its receivable. A high receivable turnover ratio may suggest that the company's account receivable collection is effective and that the company has a higher proportion of high-quality customers who pay their bills on time. Inefficient collection, poor credit procedure, or clients that are not financially viable might all contribute to a low receivable turnover ratio. Next is profitability ratio, which is profit margin on sale. Profit margin on sale is one of the most often used profitability ratio to determine how profitable a company's activity is. It is the profit remaining from sale after all expenses has been paid. It indicates the percentage of sales that have resulted in profit. The percentage statistic represents how many cents of profit the company made for every ringgit Malaysia of sales. The formula for the ratio is net income divided by net sales.
As we can see on this table, profit margin on sale of AYER Holding BERHAD, which is 175.187%, is higher than profit margin on sale of SENG Capital BERHAD, which is 107.84%. This shows that AYER Holding BERHAD can manage their organization finance so well. AYER Holding BERHAD have a better profit margin ratio that profit will outweigh cost. This greater ratio are achieved by their cutting expenditure or boosting income.
Hi, Assalamualaikum. My name is Nur Ala binti Yaakob and my metric number is 284265. I will begin my presentation with the explanation of return on asset. So what is return on asset? Return on asset is the best ratio to measure a company's profitability relative to its total asset. The formula for this ratio is net income divided by average total assets. Based on table in this slide, we can see that return on asset of SENG Capital BERHAD is greater, which is 12.91% compared to AYER Holdings BERHAD, which only have 0.38%. This shows that for every dollar of assets the SENG Capital BERHAD invests in, it returns 12.91 cents in net profit per year. Meanwhile, AYER Holdings BERHAD only get 0.38 cents. The greater the return on assets, the better the company is. Therefore, SENG Capital BERHAD is more productive and efficient in utilizing the economic resources to generate profits. Next, leverage ratio. Leverage ratio can be divided into two, which is debt to asset ratio and debt to equity ratio. Firstly, I will explain the debt to asset ratio. What is debt to asset ratio? The debt to asset ratio shows how much of an asset's value is financed by debt. The larger the ratio, the more leverage and financial risk there is. The formula for this ratio is total liabilities divided by total assets. Based on the table in the slide, we can see that debt to asset ratio of SENG Capital BERHAD is greater than 1, which is 1.91%. This shows that company SENG Capital BERHAD is riskier in defaulting on loans, particularly if the interest rate rise. Next, AYER Holdings BERHAD have only 0.76% in ratio. A debt to asset ratio of less than 1 indicates that a significant amount of the company's assets are supported by equity, and therefore the risk of default or bankruptcy is low. Next, debt to equity ratio. Debt to equity ratio measures how a company's capital structure is skewed toward debt or equity. The debt to equity ratio weighs total debt and financial liabilities against total owner's equity. Based on table in this slide, we can see that AYER Holdings BERHAD have lower debt to equity ratio, which is 0.77% compared to SENG Capital BERHAD that have 1.64%. A lower debt to equity ratio usually indicates that a company is more financially stable. This shows that SENG Capital BERHAD is riskier to creditors and investors than AYER Holdings BERHAD with a lower ratio.
To conclude, SENG Capital BERHAD and AYER Holdings BERHAD are not in the same industry. SENG Capital BERHAD produce poultry farming product, while AYER Holdings BERHAD actively operating in the properties and plantation industry. However, we can still determine the company's performance from the annual report. Based on the annual report, for liquidity ratio,
we could conclude that AYER Holdings Berhad had the best ratio compared to the SENG because it has the higher current ratio and quick ratio compared to the SENG Capital Berhad. As for the activity ratios, it can be shown that AYER Holdings Berhad had the best activity ratio compared to the SENG Capital Berhad. The inventory turnover, total asset turnover, and account receivable turnover are relatively higher than the SENG Capital Berhad. For profitability ratios, AYER Holdings Berhad has the better profit margin on sales, while SENG Capital Berhad has the better return on assets. Lastly, for the leverage ratio, it is clearly shown that AYER Holdings Berhad has the better leverage ratio compared to the SENG Capital Berhad because it has less debt to asset ratio and less debt to equity ratio. Overall, based on the annual report of both companies on 2020, we could conclude that AYER Holdings Berhad is better than SENG Capital Berhad as it has better liquidity ratio, activity ratio, profitability ratio, and leverage ratio.